Hello everyone and welcome to this video. My name is Waqar and today I'm going to be talking to you about the basics of Elliot Wave and an introduction to what is Elliot Wave. Now, Elliot Wave is a school of thought in trading and is one of the most tried and tested analysis methods. It is a very powerful and very real and very apparent theory in the markets. And if you really study it and really utilize it and own the skill, you will take your trading to the next level. Now, what Elliot Wave is breaking down how a market works in cycles. And it breaks down and makes it very easy and very visible to you how the market structure works, how market likes to go in waves and patterns. If you can identify and visualize these patterns and calculate, it gives you the ability to predict where price wants to go in the future, meaning you can capitalize on that by making profits. So what in a most basic format is, Elliot Wave is the market trends in fives and retraces in threes, meaning when price is going up, therefore an uptrend, it will like to go up in waves of five. And when it goes down, it wants to go down in waves of three and then continue up in waves of five. So how do we identify these five waves? What we have to do is do an Elliot Wave count. So in this example, you start at the bottom and you count to five. You get wave one, wave two, wave three, wave four, and then wave five. That is the most basic pattern of Elliot Wave, a five-wave impulse. When your price would reach the end of wave five, you would expect a retrace to come down and then continuation. So each of these legs of the one cycle, wave one, wave two, wave three, wave four, and wave five, each of these legs have rules. So now if you know the rules of how to trade each wave, it means you can capitalize and predict when a wave is going to begin. For example, right here, we have completed wave four and we are looking for wave five. So how would we know when wave five would complete? That's when you have other strategies coming in place, which we explain in future videos. But one method would be a Fibonacci. So you'd pull a Fibonacci retracement from the beginning to the end. And this is a very powerful thing that all traders should know about. Is this, you see these two golden lines, the 61.8 and the 65? This is called the golden zone. So I'll mark it out for you. Price is very reactive and very respective of this area because of the way banks work and the hedge funds work. Mostly they are run by algorithms. And this is an algorithm target, which is really bringing volatility into markets. It's not retail traders like me and you. It is the banks and the hedge funds and real institutional traders. These are bringing in the billions into the market, and they have their computers running to highlight and target this area, the golden zone. So if you know and you trade like an institution, like a bank, you can make money like the banks. You can follow the trend with them. So what we have right here is a wave three impulse, as we said. And then we want a retracement. Where does the retracement go to? It goes to exactly the golden zone and continues up. So imagine if you took that trade and you were predicting it in the future. All you'd have to do is forecast it, and you'd say, okay, price is coming down and I want to go long. I would do it on the golden zone exactly, and I'd have my targets in place and I'd have my stop loss in place like this. And this is how you do it in real life. And you'd have a nice tight stop loss and a large profit area. And you would actually target where the banks would target, which would be here from an Elliot Wave perspective, from algo trading. The negative 23 is your target area. So in this trade setup scenario, you have a great risk to reward. Your risk to reward is 6-1. And if you took this trade, you would have made 310 pips. And it would have reacted exactly in your target area to go straight to profit. Now, if you were to take this trade of 310 pips on a 0.1 lot size, a very small, very manageable lot size, you'd be easily making $310 on this trade purely because you knew how to trade Elliot Wave. Now, let me explain to you something else. Now, we know that waves is how the market works and how the market likes to move. No one can deny that. We can see that everywhere in the market. Now, let's bring it from a higher time frame on the daily to a lower time frame. Let's say the 4 hour. So now what we are seeing is we have finished our fourth wave and we are looking to complete of the fifth wave. Now what we would do is, so for example, we took that buy that I just spoke about and we're going up. How would we know when that is going to finish? What we would do is simply, like before, do an Elliot Wave count. So as stated before, you have wave one. Can you see that? wave 2 just like before, wave 3 just like before, wave 4, and then wave 5. So you know when price is coming towards the end to your target area. How do we know our target area? Just like I showed you, you have your Fibonacci retracement right here, reacting very closely to your golden zone, and your target area would be the -23 as your target 1 and the -61 as your target 2. So if you were to take this trade, say for example you missed your entry right here, no problem. You take an entry off the golden zone, like here. I'm sorry. You take an entry off your golden zone, right, like this. So you take a long trade off the golden zone, and you target your target area, the -23. Your stop loss would be nice and small, like this, manageable. And what you'll be able to see is that from this trade position, your target 1 is 133 pips, so $133 on a 0.1 lot size. And look at your drawdown, very small, very minimal, very accurate entries, because you were able to predict that the market was going to create a wave. So you knew a wave 3 had been completed and a wave 4 was forming. You target your golden zone to take an entry to go and complete your wave 5. Target areas being here, the -23, and your fib target, algo target number 2 is the -61. So if price does reach that in the future, we could almost bank 200 pips, purely because we knew how to trade the market in cycles. Now, say for example, this plays out in the future, what would happen next when price is here? We know we have completed 5 waves, meaning now we are due a retracement. We know that the market trends in 5s, retraces in 3s. So we find an ABC pattern. So every stage in the market cycle, whether you're going up, whether you're going down, whether you're in a trend, whether you're a retrace, Elliot Wave is telling you how to identify all of this, and therefore being able to capitalize on all market movements. I hope you enjoyed that video. In my video series, I will cover these more in advance, so you can really learn these strategies and be able to use them in your own day-to-day trading and really take your trading to the next level. See you there.